mandatory with choice. See here, the holder of security means if you are holding your security, then you will get choice, right? If you are holding security, then you get choice. Choice of what? Choice of maybe let's say cash. So that cash you can ask in different forms. Maybe let's say USD currency, INR, or different payment options. Or sometime instead of cash, you can ask for a stock payments also. All right. So this is what the holders, it means if you are an investor. So basically investor will receive multiple choices, so that investor can select choice of a payment, and either one of the payment option you can say default in this particular process. Default, it means as an investor, if you don't select that payment option, then that's fine. Investor will investor maybe let's say forgot to select or skip to select that payment, then company will process that payment to the investment holder as per the default payment option. As per the default payment option. So here eventually, company will process payment as per the default, and when we say default payment, it means that's when it becomes your mandatory event, right? So in mandatory event, in short, the benefits by default it will receive, right? But you can choice you will have a choice, so you can choose that option or select that option which benefit that you want, because payment or benefit or corporate action which is by default it will process to the investor, but investor can select the option. All right. And when we say option, it means every investor, they'll receive emails from the company, or sometime they'll get the messages from the NSDL or CDSL for selection of a choice. Let's say if XYZ company announced dividends, and dividends that company want to process in two currencies, right? Let's say company is from India and company has investors in US as well. So company decided to process cash dividend in two different currencies. So US investor can vote for US payment for USD, and Indian investors can process maybe let's say Indian investors can process payments, or maybe they can send a request or cast vote for payments in INR. So this is what it becomes your dual investments, or dual let's say event. Basically event, it means dividend will treat as a event, and this events become your dual event, dual currency event. So in case of dual currency event, so basically company will process payments to both the US and Indian investors, and this is what will treat this event as a mandatory with choice event, because announcement, once the company announce dividend, anyways benefit will receive to all investor. It's just a matter that the payment facility which is available in two different currencies, one is INR and second one is USD. So you can select that options and ask company to process benefits accordingly. So if you select, let's say if you are from India and you have decided to again ask payment in USD, but you should have that account with you, so that you can hold payment in USD as well. If not, company can directly process payments to you in your currency, which is INR or rupees. So this selection of currency is also very important, and it is the decision of investor as well in which currency that they want to benefit. But again, it's a choice. It means for a company also, it's not a mandate to process benefits in different currencies, but investor can submit their choice. If company has any facility to manage that payment, then company can definitely process payment. If company, let's say if they don't have a facility to arrange the payments for the dividends, then they'll not process it. So they'll directly process that payments in one currency only. So this is how actually your dividends works. All right. So now let's talk about little bit what is dividends, because we have discussed the flow of dividend, but we'll talk about the what is dividends and how the dividends actually works. See, when we talk about, guys, dividends, so dividend is the part of company's profit, right? Part of profit. Let's say company earned profit of 1000 rupees, all right? Company earned profit of 1000 rupees, and company decided to transfer amounts to the reserve as well, reserve to manage the business operations and distribute profit, distributable amount, right? So let's say out of 1000 rupees, company decided to process 5000 to the reserve, right, for a safekeep purpose, and 500 to the distribution, which is dividend expense. So company will process this dividends to the across all shareholders. So assume it company A has 5 shareholders, A, B and C. All right. This guy is holding 300, 200 and 500 shares. So total 1000 shares. All right. And here if you see, company decided to offer only or distribute only 500 rupees to the 1000 shareholders. So here, so when we calculate dividend, dividend for per shares, dividend processing for per shares, DPS, if we calculate, so it becomes your distributable amount divided by number of outstanding shares, So if we calculate, let's say, distributable amount divided by number of outstanding shares, so if you see 500 divided by 1000 rupees, so whatever that we have, so just calculate it, 0.5 rupees for per shares, your DPS would be dividend per shares. And this DPS, which company will offer to the investor as a dividend. Did you get this? Then company will process this amounts to the shareholders, entitled shareholders. So now let's say you have 3 shareholders who are holding around 300, 200 and 500 equities in their accounts. So this person will receive 150 rupees, 100 rupees and 250 rupees. So total would be of 500, which is this amount, distributable amount. So this is how we process the dividends, or this is how we also perform calculations as well. So against the the distributable amount, we provide choice. Let's say to this company decided to announce this payment, or let's say process payment in INR. But as I said, this guy is from US, this guy is from India and India. So this payment definitely means C will expect payment in INR or rupees. Alright, this also person will expect payment in rupees, and this guy definitely would expect payment in USD. Right? If you set up as a corporate action analyst, because as a corporate action analyst, we set up the events in accounting system or payment processing systems for record keeping purpose. So if we set up that event in the accounting system, then we process payments to the equity holders or holders of, let's say, shares in different formats. So when we say different formats, it means, so you can say, USD, INR, or different. Again, if you see any, apart from this, if you see any other, the instruction set up for any other currencies, we also process payment in that currency as well. But it depends on the bank. Let's say a company has a relations with HDFC Bank. Basically, it is a responsibility of HDFC Bank to process payments in different currencies. But yes, company A will directly transfer 500 rupees to the HDFC Bank, and then HDFC Bank's payment team, basically, so they'll take care of payment processing as per the securities instructions. So it means as per the holdings that the investors, they are holding in their demat account. So on the basis of demat account holding, the bankers will process payments to each holder. So this is how actually your means dividend earning per shares. So that amount will distribute, and even company also, they'll announce this dividends in their company's prospectus, and that dividend you will receive as a income. So you can again apply income accounting to that dividend income, and company will treat as a dividend expense in their books of account. So this was all about your dividend per shares, you can say. So how we calculate dividend per shares. So any question around this, how we calculate DPS, dividend per share? DPS is nothing but which is dividend per share. All right. So sometime you would see, so your DPS which has been impacted, so diluted. So you can say they'll call it as earning per shares as well. Earning per shares that you can calculate on the basis of total profit. So the how much the company earned profit. So you can just divide. If you just calculate DPS and EPS, you would see difference. EPS would be your total profit and divided by number of outstanding shares. Number of outstanding shares, and that would be somewhere, let's say 1000 is your total profit. All right. So 1000 would be your total profit divided by 1000 shares that you have. Just divide it. Your answer would be 1, and that 1 would be your EPS, earning per shares. See, every company, if they earn, let's say 1 rupees for per shares, they can't distribute entire profit. So that doesn't make any sense. Let's say you have received your salary in your pocket. So will you distribute entire salary to the family, or maybe will you spend entire amounts on different things, or will you transfer that entire amounts to anyone? I'm sure no, because every time we'll think about how we can save some money, or how we can transfer some money to the FD or RD accounts or investments accounts. So if we need money in future, so that we can protect at least, or maybe we can save money to protect from the different uncertainties. We do that, correct? So this is what you can also apply same logic in company as well. If company earns profit, XYZ profits, so they always ensure that they have maintain enough reserves with them, so that they can utilize that reserve amount for a different purposes, maybe to manage company's day-to-day operation expenses, or it could be, let's say, any the investing expenses where they have decided, or management have decided to invest amount of money in XYZ things. So this is how actually the things works out. All right. So let's note down two different DPS and EPS in your notebook quickly. I'll wait for a 10 second. So note it down. So it is a very important one. Dividend per shares and earning per shares. So from an investing perspective also, if you ask me, sir, how this affects earning per shares and DPS per shares. DPS per shares, if any company, let's say, offering more DPS, which is distributable amount or profit, or let's say if you are getting more and more dividends, That is also good. The reason is, if you receive, let's say, dividend, let's say 250, or instead of, let's say, 250, if you receive 1 rupees for per share, assume it. So this 1 rupees would be your 500. So that 500 you can invest, right? So you can, as an investor, you can invest that dividend amount maybe in different securities, or maybe in different, financial instruments. So if you invest more and more money in different financial instruments, so that you can multiply your assets, right? So you can generate more and more alpha. It means income. If you generate any income through different, investment strategies, so that income you can call it as a alpha. All right, so this is how actually things works. Are you getting my point? And apart from this, let's say if company earned 1000, and if that company, let's say, distribute entire profit to the shareholders, and again if that company is looking for a raising of funds through different financial instruments, so this is something again, contradictory, because when company earn profit, they could have saved some amount of money in their pockets to manage their other expenses, but instead of that, they distributed entire amounts, and now they're looking for a funds, and they have decided to raise funds through bond instruments. So basically this will affect on companies, profitability, because in coming time they'll have to pay, interest payments as well, and that affect on companies profitability. So those things are very, very critical. So while selecting, any company for a, from investment, perspective, if I talk about, IOCL, BPCL, or SPCL, all are highly, dividend paying companies, and most of the investors, they add all those companies in their portfolio because they pay, very well, means dividend, in terms of dividend that I'm talking about. So that same dividend, let's say if we invest 3 lakhs in BPCL, so your average dividend yield would be around 10%. So it means you can generate 30,000 dividend for per annum. So same dividend, if you just calculate for a 10 years, it would be around 3 lakhs. So in, next 3 years, means 10 years, you will have 100%, dividends in your pocket. And but yeah, so whenever you receive 30,000, if you invest that amount also in different securities, so you can multiply your wealth as well very quickly. So it means if you invest your amount in highly dividend paying companies, then it's a possibility that you can generate more and more revenue, or maybe let's say more and more, or maybe you can multiply your portfolio, very quickly or soon, I would say maybe next 5 years. Because see, if any company is paying dividends to you, so it means on, one hand you're getting dividend as a income, which is liquid cash, so that you can reinvest. And second thing is, if companies continuously offering dividends, so same companies, stock price, it will up in the market, and that you will have a benefits, means dual benefits. One is capital gain, and second one is your income, dividend income. So you would be in profit, double profit. All right. So from investing perspective also I have explained it. So make sure that, if you see any question around it, what is dividends and all, so always they expect at least two ratios: what is DPS, what is EPS, earning per shares, and how it works. So that you should explain in that way, along with the examples how it works and all. For EPS, reserve plus, the distributable amount, it means total profit. You can consider total profit divided by number of outstanding shares, and then simply you will means you will be able to calculate your EPS, earning per shares. So sometime you would see, DEPS term, DEPS, diluted earning per shares. Can you tell me what is diluted earning per shares? DEPS. Anyone by any chance? Diluted earning per shares. The meaning of diluted is reduce. Right, reduce. So let's say amount which has been reduced. All right, amount which has been reduced. So basically your earning which has been reduced. So to understand this DPS, let's take the same example, and when your DPS, it will be different. See, in most of the cases, DPS and EPS both would be same. In most of the cases that I'm talking about. So here also we consider the same thing, which is total number of outstanding, let's say, shares, means total profit. So formula would be total profit divided by outstanding shares. All right. So it would be same. So let's calculate it first. As per previous example, we have a profit of 1000 and number of outstanding shares of again 1000. And if we just calculate this one, it would be around somewhere 1 rupees EPS, earning per share. So now if we talk about DPS, same rule that you can apply, it's total profit divided by outstanding shares. But here is the catch. Let's say after the announcement of, or let's say in the annual meeting, company decided to announce, in annual meeting, company decided to announce stock split. Stocks split. Company decided to announce stock split. So in that case, what will happen? We have discussed that in mandatory corporate action session. So what we have discussed in mandatory corporate actions, company announced stock split, and when company announced stock split, number of outstanding shares will change. Let's say pre-corporate action, total shares means you are holding or company company had total 1000 shares. So post CA means corporate action announcement, company decided to split 1 shares into 2. So it means total shares should be 2000, right? Total shares should be 2000. So here if you see in this case, DPS eventually it will diluted. It means earning per shares, it would be diluted in a way, but it won't affect on your overall income or profitability. Why? The reason is, let's calculate it first. For a DPS, we'll consider means future expected any corporate actions if company has planned and if you are aware about it. So while calculating earning per shares or a DPS, for a DPS we always consider future actions or events, right? So that's when that the earnings, whatever earnings that you're going to earn, it will impact. So here if you see total profit, that rule would be again same, total profit divided by outstanding shares, but your number of shares will change in this case. Profit would be remain same and number of outstanding shares should be 2000. Why? Because post corporate actions, all right, post corporate actions, what happened? Post corporate actions, what happened? So if you see here, just calculate it. So number of shares which has been changed, so 0.5, so which would be around, if you just again calculate it, so around 1000, right? So 1000 profit that you can split across 2000 number of outstanding shares. So earning per shares which has been impacted in this case, so which was 1 rupees, and here DPS which is 0.5 rupees, it means which has been changed, so diluted, right? So to understand this DPS, why it is important, so that, all right, so DPS, if you see DPS stocks or DPS always considered future events. So now if we see future events, it means, see, just put a logic. What are the events which directly affects on the number of outstanding shares? What are the events, what are the different events which directly affects on the, profit means earning per shares of a company. See, overall profitability, as I said, that won't affect on the total profit of a company. It remains same, but it's just matter of when you calculate, the dividends for per share, so that dividends for per share it will affect. And as I said, in DPS, we always consider future upcoming events. So future upcoming events, it could be stock split. Note down this one. Stock split, merger acquisition, then reverse split, reverse stock split. See, there is one more term, anti dilution term, anti dilution earning per shares. I'll decode that as well, which is very much quite relevant with this DPS discussion. I would say there is one more term which is anti dilution of earning per shares. Anti, it means it will reverse it out. Reverse it out, it means your DPS, your DPS, most in a 99% cases, your EPS and DPS both would be same. Right, in an exception case where in a company has a plan to split their stocks, in that case your DPS and EPS would be different, but in a 99.99% cases DP it would be reduced, right? But as I said, in an anti-dilution term, your DPS it will reverse. It means it will higher than the earning per shares. And now your question would be like, sir, how it is possible? Yes, it is possible in case of your reverse split event, basically. Reverse split event, or I would say even in terms of, you can also relate with buyback or any return of capital events. If company want to take a return of shares or redeem the certain number of shares, or maybe to announce reverse stocks corporate action. In reverse, we have seen that number of shares will change, correct? So reverse stocks and all, in that case definitely you would see impact. So to understand this same example, let's say how it works. So assume it, instead of company announcement of split, company decided to announce reverse stock split and post corporate action. So number of shares should be around 500. All right, number of shares should be 500. So now if we calculate ADPS, a anti dilution earning per share. So formula remains same, which is total profit divided by number of outstanding shares. But when we say outstanding, it means future expected events that we consider for calculation. That's the difference. All right. So as I said, company was holding, ABC Corp was holding around 1000 shares, and that same company decided to announce reverse stock split. Under reverse stock split, number of shares which got changed from 1000 to 500, right? And this will happen in near term. See, dividend, maybe it will announce, or let's say company decided to announce earning today, right? But they have also considered corporate action, which is reverse stock split, and which will announce, means they'll announce today, but actual benefit it will process out maybe near future. But here when we calculate anti dilution earning per shares or diluted earning per shares, in both the cases we always consider, as I said, future coming events. Whatever future coming events should be, that we considered and process it out. All right. So now if we talk about anti dilution earning per shares, if we see the same dividends, we have number of the shares, which is 5. Updated shares count would be as per corporate action, which is 500, but the dividend amount it remains same. Sorry, this which is profit amount remains same, which is 1000. All right. So if you calculate, it would be around 2 rupees for per shares. So your anti dilution earning per share should be 2, and earning per shares, if you just calculate, we have earning per shares, because for earning per shares we always calculate on the basis of current shares. We calculate on the basis of current shares. All right. So here, see, that doesn't mean if you calculate benefit as per the the current shares, your profit would be high, and if you calculate on the basis of maybe as per the DEPS, it will affect on your profits and all. So nothing like it. So first, make it clear yourself. It's not for that. So this is simply for your I would say this is simply for one approach is something which is considering all future events, and another approach which is something that they are directly calculating the earnings on the basis of current outstanding shares. It's just both are two different approaches, so that doesn't mean one will offer. So here if you just see, as per EPS earning per shares, your dividend amount would be somewhere around 1 rupees for per shares, and as per anti dilution methods, your share profit, which is per share profit, which is 2. So that doesn't mean your total profit will change. See, total hold on, my dashboard got hanged up. Yeah, so total profit never change in both the case, right? It's just a matter of calculation, one which is considering future upcoming events, and another one is considering only the current events, and on the basis of current outstanding shares, we are calculating it. That's all. There is nothing like one approach is different and another approach is different. So did you get this? So it's a very important one. If you are attending any interview, I'm sure definitely you would see question around this. So this dividend, it is a part of your mandatory corporate action, and also we consider this dividend under mandatory with choice. Okay. So same events. Now if we talk about, let's say, dividends that we have discussed. So now let's talk about CSO. CSO stands for cash and stocks options. Cash and stocks options. Same example I would like to carry. How it works. Let's say you have dividend per shares, which is we have calculated here as per this calculation. So dividend per shares we have, which is 0.5 rupees for per share, and current price of shares, which is around, let's say, 1 rupees we have, right? 1 rupees per share price which is available, 1 rupees for per share. Company decided to distribute this dividend in two forms. one which is in one stocks and second which is in cash. If let's say any investor, so as per this 0.5 rupees calculation, if I just take it this calculation on next page, let me see if I calculate, sorry, if I copy and paste it on there directly. I don't know whether it will copy or not. Anyways, I don't want to waste time. So we have a data of companies holders, shareholders. So shareholders we have, which is A, B and C. So they're holding shares, let's say 300, 200 and 500. So they are eligible for a dividend amount of 150, then 100 and 250, which is a dividend amount, right? Dividend amount. Corporation A. So now let's say Corporation A Corporation A has decided to give you an option, means same dividend events, company want to divide in a way that, let's say company has set the target, company will offer 250 rupees in cash, and company will also sell it out to 50 rupees worth of rupees shares. So basically here if you see company's per share prices, so per share price which is 1 rupees. So each shareholder will receive shares as well as cash. Right, so shareholders will receive cash as well as stocks, both. So let's say if I talk about now as per this calculation, cash and stocks. So this person can ask for, let's say, dividend of dividends of 75 rupees something, am I right? And 75 shares, because the dividend per share price which is 1 rupees per share, so 75 shares that we can expect. So total value would be around 150. This person can also ask for 50 rupees as a cash amount and 50 rupees as a stocks, number of stocks that company can process. This person can ask for 125, or let's say like this. So here if you see, same dividend company can utilize in this way. Your question would be like, sir, why company will do this? Am I right? Why company will do this? See, instead of cash, if as a company, if you think, if you process stocks payments to anyone, so it means this cash company will keep with company. So basically company wanted a cash as a liquid cash, or to maintain liquidity, or maybe let's say to reinvest that cash somewhere. But company don't want to force to the any holder that, look, we want cash, so can you just process entire amount. So company don't want to do this, just company want to offer cash as well as even stocks. So in stocks it's like bonus stocks, so company just want to offer free stocks to the company, so company will not charge anything for those stocks, but eventually company is now taking your cash dividend, right, worth of rupees 75 something, for A investor, and for B around 50 rupees, and for C around 125 rupees. So basically company will process stocks as well as cash to the holder, but whatever portion that you would see, this portion company will keep it with as a working capital, and that's the plan, because company wanted that capital, company wanted that cash. All right, when company wanted that cash, guys, company will keep that cash with company, but in return of cash payment, so company will process stocks to the investor. So this is how actually your cash and stock dividends that we process. This particular type, which is very much famous in US, UK, and other countries apart from India. In India, hardly you would see such events, but in US or other countries, continuously you would see that you know the companies announce basically this type of events, means you can say CSO, cash and stock option events. So basically this CSO is a part of dividend processing only. Anyways, company want to offer benefits, but company will offer benefits in different forms apart from your cash, and that's become your CSO, cash and stock option. All right. But in this example also, so one thing also keep in mind, so you might see company will set one default option because it's a choice event. What if, let's say, company has a plan to distribute in this way, but on record date, or maybe after record date, let's say, company will send official email to the investors, and they'll ask to confirm it, which benefit that you want total dividend amount, which is this one, let's say this one, or else same dividends that you want in split, which is 75 as a cash and 75 as a stocks. It's just an choice. What if, let's say, investor A is not interested in cash and stocks? It means this one, right? Investor A is not interested, investor B is interested, investor C is also interested. Then company can't force to A, understand this one. Then by default company will process 150 as a cash to the investor A, and for other two, one B and C, company will process CSO, which is cash and stock corporate action event. 90% people, they are only aware about dividends, right? They don't know about CSO and all. But from an interview perspective, or from a processing perspective, you may expect questions around this portion. So you should ensure that you are means you are aware about all of this process. All right, so if you don't know about how to get it this done, so you may see problems around it from a processing perspective. So we actually check the MT5 codes which we refer. MT, it means message type 567 and 68. So both the codes that we refer to process CSO and even cash dividend as well. So any question around CSO? CSO is nothing but it's a part of cash dividend only, but company want to process dividends in two different forms. That's all. Why company want to do this? As I said, if company is looking for working capital, then company can come up with different distribution plans. So if company offers stock dividend, it means company can keep that stock that cash payment or earned profit with company only, so that they can manage their other obligations. All right. So this is how it actually works. So in case of any question, so please go ahead and text. Otherwise, I'll complete one of the, which is type, which was pending from the previous session, which is DREAP, Dividend Reinvestment Plan. Dividend Reinvestment Plan, DREAP. I would request everyone, please, note it down, each and everything. I know this session is recorded one, so you can go through the recordings, but eventually I would like to tell you this. If you don't go through the recordings, at least, you can go through your, self notes, which you have, means taken through the session. So you can go through this, and this will only help you, because every time I don't think you will have enough time to spend around. But if you can take a note, so you can follow your notes only, and through your notes you can quickly process that stuff. All right. So now if we talk about, let's say, if we talk about, so if we talk about, let's say, DREAP, dividend reinvestment plan, dividend reinvestment plan. See, most of the CSO and DREAP events, most of the cases, company don't process that events or schedule that events. The reason is, instead of processing, let's say, two different events, what I would prefer, I would directly announce, means instead of stock, let's say, adding to the CSO, so I'll directly announce bonus issue, right? Means total profit I'll transfer to my reserve accounts, and from reserve accounts, if I want to access, then I'll directly announce bonus shares to the investors, instead of this CSO, DREAP and all other things. But here most of the CSO and DREAPs all are like broker driven events. Broker not broker, broker driven events. So what it means, so actually broker, let's say there is one A broker. So A broker will create a plan, which is a DREAP of company A corporation, and if company A corporation announce dividends, then broker will contact to everyone. Broker will contact to everyone and ask everyone to process their earned dividends to the broker account, so that broker can reinvest that particular dividends in the same company stocks, and broker will maintain that records and everything. So basically, if you don't know how to deal with your dividends, so broker will announce DREAP, and broker will manage your dividends. Broker will invest your dividends in same company stocks. Broker will maintain that reports with broker only, and definitely broker will charge some amount, which is DREAP, dividend reinvestment processing fees, or transaction fees, or upfront fees that you might see with this particular event. So basically, it's a normal investments activity, but normal investing activity which is managed through your dividends income. That's all. If you ask me in a very simple terms, it's a dividend processing activity, or dividends managed by the broker for investing purpose. In short, if you ask me what is DREAP, dividend which is managed by your brokers, and brokers will invest same dividends, whatever amount that you have received, in same company's stocks. Because see, as a company, why company will ask you to process dividends, to the same company? If company wanted to announce dividends, company will not announce any DRIP. Company, instead of that, company will process, as I said, if company want, in let's say, earned profit for their day-to-day operations, any company, they'll not create any DRIP, they'll not create any CSO events. Instead of that, I would prefer to announce stock dividends or maybe bonus issue, and I can utilize, as a company, I can utilize that cash amount. Simple. So I'll not directly go ahead with cash, CSO, or any DRIP events and all. So all are the events which is the broker driven events. So it means broker want to provide that facility, or broker want to process that facility. So that's when your CSO and DRIP events come into picture. So let's talk about DRIP events, how it works. Let's say company announced dividends. Again, holding pattern A, B and C. They're holding, let's say, 300, 200 and 500 shares. This guy going, let's say, will receive around 150 rupees dividends. Right, dividends amount 100. Same example I am just rolling over, okay, and then 250 rupees. So all parties will receive dividends amount and they are eligible. So now here the broker is saying, broker, let's say A, broker has announced scheme name as, let's say, DRIP, dividend reinvestment plan. Shareholders, they can invest, broker will send a notice to all. If you want, you can invest cash with broker. So basically broker will maintain the records for all three. Broker will maintain the records for all three. So here broker manage that events, and let's say A decided to contribute 150 rupees for a reinvestments. Let's say B decided to invest only 50 rupees, not full amount, and C decided to invest only 50. Right, so broker will process, and let's say current market price of a shares is something different. Current market price of that same shares, let's say which is 2 rupees, 2 rupees in 2 rupees in market. So here broker actually broker will buy shares from the open market. So under this account, broker will buy 50 shares. Here broker will buy 25 shares and 25 shares. So total how much? 50. So 125 shares broker will buy it from the open market, guys. All right, broker will buy it, and those shares it will maybe allocated to shareholders. This is the one way, or maybe broker can separately maintain it and separately buy and sell accordingly, means as per the investment plan broker will manage it. So here the point here is, from a technical perspective, if someone asks how dividend investment plan cycle works, right, through this example, how you can understand it. First, company cycle of this dividend recycle cycle of reinvestment, how it works. First, company process dividends, because company has nothing to do with that dividend amount. Company directly announce this dividends and process it. So this is become your dividend company, which is processed. All right. But on processed dividend amount, broker will reach out to each one. Broker will reach out to each one and convince to all of them, look, I have a better investment opportunity. You can invest amount in this particular pool, so that we'll invest same in different companies, or maybe let's same company. So it depends. Basically, whatever dividends let's say investor has earned, so investor can think about to reinvest. Now your question would be like, look sir, why should I invest my dividends, right? See, if you want to reinvest your dividends again, so you can multiply your wealth. Multiply your wealth, that means you can multiply your portfolio. So your portfolio value, it may grow. How? If we invest 150 in different company stocks, or maybe same company stocks, and if company has a let's say strong fundamentals, then same company stocks price will grow, and your dividends amount also it will grow. Are you getting my point? So it depends on the basically scenarios. There would be lots of things that you would see in the background. So you may see thousands of other things. All right. So if we talk about now processing cycle, first company process dividend, it means company directly process cash payment. So same cash payment, basically broker ask for a reinvestment. So it means broker asks to reinvestments, and if any investor is ready to let's say reinvest, then broker ask for a cash payment, and same cash payment broker will invest maybe in same company, or maybe in other company. But in most of the cases, broker they invest in same company and maintain the records. So this is how actually flow works. So in flow, see, same DREEP events we process two times. One here, so at the time of when the company process dividends, we actually process payments to the shareholders account, and same shareholders account basically cash, so that we reverse it out. So we reverse from the dividends process accounts. So here if you see, we'll reverse around 75 rupees, that will reverse from the main total dividends. Here will reverse around 25 rupees. Here will reverse around again so how much, sorry my bad, 150 rupees. Here will reverse, oops, yeah, actually one because this particular A is interested in all money, so 150 that broker will reverse. Here also if you see, broker will reverse 50 rupees out of 100 dividend income, and here also 50. This will reverse, and this amount it will transfer to the broker, and then broker will manage that entire show. So this is what we process DREEP event, dividend reinvestment plan. So any questions around dividend reinvestment plan, just let me know. Dividend reinvestment plan is nothing but it's just investing your earned dividends in same company stocks, or maybe in other company stocks through broker. So that becomes your dividend reinvestment plan. And as I said, most of the dividends it will managed by your brokers only, brokers or any intermediate entity. That entity will manage it. It's like a mutual fund pool. So it means mutual fund company created a pool, ask for SIP or cash amount. So when you invest, means through your cash payments or different payment options, then same company will manage your basically accounts, right? So they'll manage it, they'll invest that same dividends in different again financial instruments and raise for it. So this is how actually it works. So did you get this? So now let's talk about some technical terms that I have with me, means dates and all, I would say. So for a cash dividends also, you would see, different dates. We already discussed, these dates. Expiration date, it means trade date, that you can say, because on this expiration date we should buy the shares if we are looking for a dividends or any corporate action benefit. So it's a mandate. Entitlement date, it means your trade date, basically. Trade, it means, so we should buy and sell the security max to max on that date. After that, there would be X date. On X date, if you buy anything, as a buyer you will not receive any benefit, but as a seller will receive the benefit. The reason is security, it will take time to settle in our accounts, and that's what it will take time to get it settled. All right. So the next one is your DREEP events. For a DREEP events also, processing pattern, if you see, expiration date, entitlement date, X date and record date, all events will have same dates. Even for a CSO also, expiration date, entitlement date, X date and record date. So all dates are, guys, very key dates. Key date, it means key date. Right, I'll send you the screenshot. I won't be able to share my entire sheet, but I'll share you this a screenshot. If you want, just go through it again and note down all of this date, because all dates are very important one. If you are attending any corporate action interview, you may see questions around this, lots of questions around this, because today also, means after the break, we'll discuss at least 10 around 10 top questions and answers I would like to discuss, because corporate action, which is one of the key topic, I would say, that comes under your fund accounting domain, that comes under your mutual fund, hedge fund, private equity, all right, even loan processings, all right, stock market. If you're looking for any, let's say, capital market profile, again the stock, this events comes under that profile also. So it means it's a key portion of your entire discussion, and even it's a high paying as well. So most of the corporate action analysts, they're earning well. Corporate actions jobs, that you would say across industry. You can join broking firm like JP Morgan, Goldman Sachs, NT, BNY. They have settled processes for corporate actions, and you can make more money. You can also join big four companies if you are really interested in consulting and all, because they offer consulting services to the clients. Okay, so you can also join companies like Citco or Apex and all, because they also hire corporate action analyst for a reconciliations and break resolution process. All right, so and we missed to discuss one more corporate action event, which is rights issue, that we haven't covered on that date. So next 10 minutes or 15 minutes, I would like to talk about right distribution events, and then maybe we can take a break, and after that we'll have a detailed discussion on corporate actions, questions and answers, as well as I'll walk you through stock market data, means where you can check the corporate action details, how you can calculate their ratios. Second, on Bloomberg also, we'll try to search any snips if we have for a Bloomberg. I'll walk you through that, and I have a PPT also, means which is represent few key events, so that you can go through it. All right. So if we talk about, guys, right issue, right, it means it's kind of, again, you can say, the promise. If, let's say, if any businessman or entrepreneur, if looking for a profit, any means anyone, if looking for a profit, so that guy, basically, uh, if let's say, assume it, it's again assumption, if you're looking for a funding and you don't have a different financial mode or sources to raise funds, then what would be the best option See, if you have, we have already discussed this. If you have a strong, positive cash flow revenue, then you can go through the even, debt financial instrument as well for a capital raising part, right? But if you don't have a, let's say, strong cash flow or a strong system to generate money to repay the debt, then it would be very difficult if you again go through the debt process. So in most of the cases, what process that we follow is, we always follow the process that you can reach out to the existing shareholder. It means, same example, if I, let's say, take it to understand in better way. Same example, you have around three ABC shareholders. All right, corporation A has different shareholder A, B and C. A is holding 300, 200 and 500 shares. See, A company is looking for a fund. Let's say looking for a fund of 1000 rupees, right? So as I said, they can approach, or they can have a multiple ways as well. One which is debt, it means bonds, loans, and which is rights distribution. Rights, it means they can sell out rights, and those rights the investors will subscribe it. Where if they subscribe, then company will ask for a payment, and company will process stocks to their company's account, means shareholders accounts basically. So here the important is, let's say company decided to raise 1000 crore capital, or 1000 rupees capital, I would say, with current market price of a share is, let's say, 2 rupees, but company decided to raise with 1.5 rupees. So basically 0.5 rupees, which is a discount, and always rights in a company issues on discount. All right. So here also company decided, so rights price would be 1.5 if you compare with the market price. And company will offer, it's an offer, guys. This one is kind of an offer. Company can't force it. Company offer the price for per equity, which is 1.5. Means if a investor buy shares, the assumption is if a investor buy shares, then company will sell the shares with 1.5 rupees, and this would be add-on capital, that if company want to raise additional capital, then company can come up with different plans. Company will offer a discount, but it's a trap. If company offer a discount, guys, trust me, it's not your benefit. If company is offering benefit, then how company, let's say, adjust that benefit? So benefit will be adjusted from the existing shares value. So it's not your actual benefit. So it's a trap anyways. But from a company perspective, which is very important for us, so from a company's perspective, how company manage this event. So let's say company will offer first discount, and if company offer a discount, then I'm sure some of the other person that will get trapped automatically. Let's say let's say C is promoter, and B is mutual fund company, and A is, let's say, common investor like us. See, market price of a shares, which is 2 rupees, right, and 1.5, which is a right price. So discount, if you see here, which is 0.5. So your thought process as an investor, your thought process would be, if I participate in a company, right, and if company is offering, let's say, 300 rights, because rights will be allocated on the basis of your existing shares, and here in this case, let's say company come up with the resolution like 1000 rupees company want to raise, and share price which is 1.5. Just divide that. Let's calculate it. 1000 divided by 1.5. So total 666 rights that company is looking for sell. Company is looking for a sell. How the allocation would be? If the 666 is the actual, means total shares, company will have to allocate that shares with the number of total the existing shares count is this one, old shares you can say, divided by old share. So if you just divide with the old shares with divided by 1000, so it goes around 0.00 rights for per equity. So basically this person is eligible for 300, just divide with 300 number of shares, so into 300, so it goes around 200 rights. So this person will get the rights for 200. So it means he can maximum subscribe up to 200 shares, even subscribe for more than that as well, so that becomes over subscription. But minimum he can subscribe for 1 shares at least, or maximum can subscribe for up to 200. But if anyone is interested to subscribe more than that, then you can also bid your means number of shares that which you are looking for. Company can adjust that as well, so that's not an issue. Depends, means they can increase their rights issue size, or sometime they can see the other shareholder shares and they can process in your accounts, so vice versa. All right, so let's say this person, if you just calculate again, so 200 into 0.66, which is 130 shares it will receive to this one. And if you talk about this guy who is promoter, 500 into 0.66, so this person will receive 330 rights. So all are rights. All are rights. See, company will announce rights through subscription event. Subscription offer. Company will announce rights through subscription offer. So in subscription offer you will get the rights. So against your rights, means this rights, you can submit your you can cast your votes, because you will get 200 rights. Then you can, maybe let's say assumption is you have cast vote for my system, you have casted, let's say, vote for 250, all right, and here B, let's say, casted vote for the eligible shares are 132, but casted only vote for 100 shares, and this guy is not interested. This guy is not interested. See, company has a target to raise funds which is 1000 rupees, but company can't raise 1000 from one shareholder, because this is something, it will affect everyone's investments holding. The reason is, if company is offering this discount, 0.5 rupees discount, so this discount it will adjust with this particular shares value, right, 2 rupees shares value. So it's a very important, so that company is giving an opportunity to everyone, so everyone can participate and see. Okay, so let's say this guy participated, it means this guy is looking for more shares, more than 200. So this is become oversubscribed, guys. Oversubscribed. So this request, which is something for oversubscribed, because the actual rights which was offered is 200, but this guy is looking for 250. So it means, so this guy has subscribed rights extra for 50 shares. And this one, if you see, eligible quantity is 132, but this guy is only subscribed 100 shares. So this is something you can say under subscription. and the C, which was least interested in all of this event. So this has become your lapse rights, or you can say techno. So eventually this rights, lapse rights. See, company has an option. Company, see, if this guy is not interested, but this guy is interested in more, so company can adjust, 50 shares from this rights as well. Because anyways, company is looking for a fund, and if the C is not interested, then company can bid all of this, 330 shares from here and remaining 32 shares from here. So total company can distribute, rights, means company can distribute that rights to the, or maybe sell it out rights in open market as well. So it depends eventually how company want to, process it out. I believe we have missed some calculation, because 200 and 130 it becomes, okay, that's my bad. Right, calculation is right. So here 330 shares which will lapse, and again here also if you see 130, out of 130, 32 shares it will lapse. So total 362 shares will lapse, but out of this lapse company will have a different option. Company can bid this particular shares in open market to the wealthy investors like mutual funds, hedge funds, or rich people. If the other, let's say they are not interested, because anyways company is looking for a fund. So company first, company will announce to the existing shareholders, and then remaining amount for remaining shares company can put it into bid and raise funds. If not, if let's say company has received excess request from the other existing shareholders, then company can adjust from that, lapse shares as well. So this is how actually rights we process. Rights is nothing but, in short, now if you ask me summarize out of this, calculations and all. See, rights, which is something for raising capital from existing shareholders. Raising capital from existing shareholders. So basically you can raise capital from existing shareholders if you have existing shareholders with you. All right. So this was all about your right distribution event. So now I'll just give you this